Evening. Good evening. Let a couple people jump on or see if a couple people will hop on. So from the title, you guys can see we're going to be talking about the first 5 days of the year in the stock market and the currency exchange. I just want to drop a little something for y'all, man. I just want to sprinkle a little something so if I can get my chef bay, stock bay going. But we're gonna wait, see if anybody pop in, and then we'll jump this thing off. Just want to kind of talk about the first 5 days and how historically that tends to lead the remainder of the year for the market. So we'll just see, man. If y'all do me a solid, man, if you watch this replay or you jump in, man, do your boy a favor and what we like to call wipe your feet off, man. Hit that like button, hit that share, man. That's gonna be the admission ticket. But y'all, do that for me, man. Y'all jump in. Or when y'all jump in, let's just say. Let me see. How's everybody's Sunday, man? Y'all enjoying y'all Sunday? So we'll go ahead and jump in real quick. I ain't gonna take too much of y'all time. In the first 5 days, this is actually an indicator, and I'm gonna drop the link for you guys of where you can find this report. I would say, for the lack of a better word, this write-up. So the first 5 days indicator is important this year. And y'all give me 1 second, man. I got a ruckus in the other room. So the first 5 days, it's a very important indicator, and you guys can get y'all a little bit of a cheat sheet or a cheat code for the markets. So the first 5 days, the indicator suggests that if the stock market is positive the first 5 days or negative, then there's an 83% probability of a positive or a negative year. So whichever way, tomorrow's gonna be game day, man. I want to just drop a little nugget out for y'all. I was gonna keep it in a pocket, but I'm gonna go ahead and share it with some of you. Again, all I ask is for a like, a share, comment. Let us know that this is helping you guys, or you should keep this rolling. So the first 5 days, the indicator suggests again that there's an 83% chance of a positive year if we start the first 5 days. So tomorrow will be the 5th day of the year. We were dipping or dropping lower. We started off negative, kind of a bearish tone to the market, and then Friday with the job reports, we actually got a pretty nice spike in the market. So today or Monday is going to be game day. We want to see how the market's going to respond. The bulls are going to need to go ahead and finish the day off green, or the bears need to go ahead and continue that down momentum, and we'll see how the market could potentially pay out, at least for the rest of the month. There's a possibility that it follows through for the full year. So as anything in life, nothing's always 100%. As this says, 83% probability, and there is always a potential that this time is different. So there's a saying in the community that you never say that this time is different or this time could be different. One of the ways they put that quote, but due to COVID, there is a potential that this time could be different. But we are set up in some of the, or let's do it like this. Some of the positive things we have going for this year within the stock market and currencies is going to be, we have we're coming off of a 40% year, generally historically, and that's what I wanted to kind of highlight on is historic statistics and patterns that show up in the market that we can take advantage of, that don't need any technicals. We don't have to look at any charts. We can just look off of history and how the market actually functions. So with this first 5 days indicator, it is very important. A lot of people trade off of this. They make their money off of this. You guys will probably hear about the Santa Claus rally there's other different cycles that we see in the market and also trends that we can take advantage of and kind of cut down some of our work. So going back to what we have positive for the market, we're going to have the potential for the 5-day indicator. So depending on how we close or how we move Monday, it gives us more indications to the probabilities of what could happen for at least the rest of the month or the year. Now we have that. We also have we're coming off of a 40% gain last year, and then we also have it's an election cycle. So on the bearish end, we do have a lot going on with as far as the market expectation of how the Federal Reserve is going to react as far as interest rates. So I don't want to make this too in depth or seem too intense. Basically, we just want to pay attention to what history happened, because history generally tends to rhyme. I don't say that history repeats, but it does tend to rhyme. So we got 3 bullish catalysts or potentials, 3 bullish things that could play out in this market. And then on the bearish side, we have this as well, potential for the first 5 days to at least carry us throughout the month. So we're going to be playing, if we go bearish Monday, we get a nice impulse or momentum to the downside, then we're going to be looking to finish this month off, and that's going to make us have a more bearish or cautious tone towards the market. On the another caveat for the bears is also just how far we done moved up, and the market is the market has based that move on the potential of more what we call QE or quantitative easing, or basically more liquidity or more money being pumped into the system from the Fed. Now, we kind of stand in the middle of that. We were more on a higher for longer approach, meaning that interest rates will stay a little bit higher, and that all trickles down to the things that we're going to be doing in the market. So big decision, what we call inflection point. We can go either way. We're going to be monitoring the market tomorrow, and that's kind of what we wanted to come to you guys for, is just kind of watch what happens tomorrow and give you some leading indications. And we also wanted to just highlight that there are, again, historic patterns, and there are different things that almost repeat. I use the term rhyme, so we can use history as a guide going forward. So I wanted to drop that off, man. I hope I wasn't, I hope I wasn't using too much verbiage. I'm looking for a word. I want to keep it in layman's. It don't want to come to me too much. Anyway, man, that'll be it, man. That'll be the video, man. Just remember, you can learn a lot from history, man. You can learn a lot from these repeating patterns that happen in the market. So pay attention to the first 5 days. I'm gonna drop the little link up in the. I'm gonna drop the article in the chats. And as I said, man, y'all show your boy some love, man. Hit that like, hit that share, man. If you know anybody that trade or could be interested in learning how to day trade or swing trade, we're definitely looking forward to see how we can assist to serve anybody on their journey. So love, peace, light, man. We're gonna see y'all on the next one, man. Just want to drop in, man. I'm off the TikTok. If y'all haven't, follow me on King Visions FX on TikTok, man. We're gonna be doing more lives there as well. So peace, man. Y'all enjoy y'all Sunday. Deuce.